My name's Dan Larimer. I'm the founder of Bitshares. And a lot of people are asking me about what Bitshares is. And it's paradigm changing. It's changing the perspective on how we think of Bitcoin and altcoins and the entire space. So, Bitshares are shares in a company that is not an incorporated entity. Now, you can consider Bitshares like Bitcoin. Bitcoin is a company. The Bitcoins are the shares in the company. They're traded from person to person, just like Bitcoin is. You can sign the shares over to one person and bam, they've got it. So everyone's used to the idea of stock. They know why stock has value. They know why shares have value. They're used to the idea of share certificates, that you can transfer them between people. You could, in theory, barter with share certificates, just like you could with, say, shares in Apple stock. The interesting thing about Bitcoin, or Bitshares, is that the shares are digital, and they're cryptographically signed to transfer them from person to person. So, when you try to explain Bitcoin to someone, like, what is Bitcoin? And you have to go, well, you got blockchains and it's a currency. And it's really a metaphor that brings more confusion than clarity. And I was on the flight over here, I was trying to explain what Bitcoin is to the guy sitting next to me. And I said he had never heard of Bitcoin other than a little bit of Mt. Gox. I had no idea what it was. So I skipped the entire currency analogy. I went straight to a company, because people automatically understand companies can have value. They can issue shares, they can be traded, and Bitcoin is no different. It's just a company where the shares are not on a stock exchange, they're traded peer-to-peer. The ledger that allocates who has what is entirely decentralized. You're like, oh, okay, they understand it has value. Now, why do they want to own shares in Bitcoin? Well, let's analyze Bitcoin like you would any other company. You have to ask, well, what's its business model? How does it make its money? And what are its expenses? And what's its long-term growth potential? Well, if you look at Bitcoin, the transaction fees are the revenue. It's really providing the service of validating the transactions, and it charges a fee for this. Now, Bitcoin seems to like to give away a lot of free service to customers, but it's not free. Transactions do cost money to process, and they require bandwidth and things like that. But Bitcoin also has expenses, just like businesses do. You've got the miners, you've got to pay them. Now, Bitcoin doesn't have a bank account, it has no way to pay employees, so it does like all startups do. It pays them with shares in the company. And so Bitcoin is continuing to pay shares out to the people who are securing the network. It's just like a business, except in the case of Bitcoin, it's spending $1 billion a year to have people dig holes and fill them back up again just to provide security. The only security Bitcoin gets from all of this, by the way, is an amount directly proportional to how much money it burns. Anyone willing to spend more money can take it over. So why is this important? Well, first off, why do we use coin instead of shares? You know, you start telling some of these terms, Bitcoin's a company, you're issuing shares. This is what your lawyer is going to say when you talk to him on the phone. And it creates a real problem. So no one likes to talk in terms of shares or with this analogy. But just because you call them shares doesn't actually make them shares in a legal sense. They're not a liability between any person. It's just a digital ledger. But metaphors have a very important impact on how we communicate and how people understand what we're doing and how you can then reason about a problem. And just because you call it a share doesn't mean it's a share in the legal sense. The way I think it's going to end up going is eventually calling Bitcoin a currency is going to make about as much sense as calling a car a horseless carriage. We just didn't have the words to describe it. And it leads people to ask the wrong questions, like, well, how does it move if it doesn't have horses? But people intuitively understand why companies have value and how to evaluate them. So despite the words you use, it doesn't make it a legal share just because you're using those terms. So One of the first businesses that we can build is Bitshares X. Now, if you have a company, well, what can a company do? A company can use its shares for doing all kinds of different transactions. In this case, we want to implement the business model of a bank. Now, banks create dollars. Whenever you go to borrow money from the bank, they take your collateral, your house, and they lend dollars into existence. They didn't exist beforehand. You just swapped IOUs with the bank. And the bank's willing to do this because they have your collateral. Then when you repay your loan, the bank takes the dollars out of circulation. And of course, if you fail to pay your loan or the value of your house falls, they have the ability to foreclose and make sure the loan gets paid off. And this is how banks remain solvent. Well, we can do the exact same transactions on a blockchain. The only problem is the collateral. You can't use your house. Bitcoin cannot foreclose on your house. But what if you use the shares in the bank as the collateral for your loan? Now the bank can have the bids and asks right on the blockchain. It can know the price, and it can automatically call the loan and back off the collateral. The result is with Bitshares X, our bank and exchange, you can create a digital asset that has the price stability of the dollar, of gold or silver, but all the other properties of Bitcoin: fungible, infinitely divisible, transportable anywhere in the world. So this is just a different business model derived at using the same concept as Bitcoin. Now, we still have to provide security, and we still have to have revenue. So Bitshares X charges transaction fees just like Bitcoin, except instead of paying them to miners, we pay them as dividends to the shareholders, or we buy back shares from the network and retire them. And to provide security, we actually use proof of stake. Now, if you think about Bitcoin, it's like a company that's got two classes of stock. You've got the capital shares, which are the Bitcoins, and then you got the hashing shares, which are the control. And you've separated the two. Proof of stake is just combining it so that the shareholders vote. They get one vote per block, per share, on what the current ledger should be. And it's actually more secure and resistant to attack than Bitcoin, while also not costing anything. So it's a more profitable version. Your percent ownership in Bitshares X will actually increase as you will hold it, because transaction fees are used to buy back the shares. The other thing is the on-chain market means there's far greater demand for transactions than Bitcoin. Not only are you using it to pay people, but every bid and ask. It's like getting a cut of every transaction on Bitstamp, Mt. Gox, etc., because it's going through a decentralized blockchain. So in your current bank, the insiders run away with bonuses and they're bankrupt. They're fractional reserve and they can't really do anything. But here you receive dividends from the fees, and the reserves are 200%. We've actually increased it because that's the collateral backing it. There's twice or more the value backing each bit USD in the system. That's our representation of dollars on the network. But this is just one thing that you can do using the Bitcoin as a company or Bitshares model. We're really excited about being able to do Bitshares music. The idea behind Bitshares music is that instead of selling people copies of songs, you sell them shares in the song. The shares in the song can then be traded on the network, with the fees from the trades going to the owners of the shares in each song. And then the blockchain can implement the business model of a jukebox. Each person can pay to put some money in the song they want to have played, and whichever song has the most money on it gets played next. The money from the jukebox gets sent to the artist. This is just a different business model. All these transactions can be implemented on the blockchain using the same security model. The more transaction fees you have, the more value you have for Bitshares music, and of course, the shares in Bitshares music back everything in the system. We can implement bingo. If you were going to create a company that was going to be in the business of bingo, what do? You sell bingo cards, and then you draw numbers and you create a jackpot, and whoever wins, they get the jackpot. Well, you can have a blockchain. The blockchain allows users to buy bingo cards. They can pick the numbers they want. Every couple minutes, a new number is drawn. It automatically fills out their card. And you have a jackpot. The interesting thing you can do is if you get 2 or 3 in a row, you can sell your card to someone else who thinks they're going to be lucky and finish the card. Now these are just transactions on a blockchain, but once again, it's a profitable business model that just utilizes the same concepts. Now this is one that I'm particularly excited about. You can actually do car insurance, health insurance, life insurance, all on a blockchain, where the insurance funds and the insurance plans and the adjustment of claims is handled in an entirely decentralized manner. So you don't pay premiums to the insurance company or end up underinsured. You can implement on the blockchain. It's a little bit more in depth to explain how this one works. If you visit us at our forum, I'd be more than happy to explain the details of it. But this right here is going to be game-changing, especially in continents like Africa, where it's really hard to get insurance on a lot of things. So basically, the whole point of all this was to change the perspective on Bitcoin. When you go to explain Bitcoin to someone, don't mention blockchains, don't mention mining, because mining has nothing to do with it. You're paying employees for security. They understand that. Instead, mention shares. This entirely bypasses the monetary policy. What do people who complain about Bitcoin say? You have all the gold bugs out there say Bitcoin is not hard money. It's worthless. It's fiat. It's no different than the dollar. And these are people that like freedom and like these type of things. But I bet you they understand stocks. They understand why shares in companies have value. They understand business models and services and why you might want to own a share or something like that. So this is where you can tell it. Now, Bitcoin is not money. I tell people that they should add Bitcoin to their stock portfolio. You know anyone who says save your money in dollars? No. They tell you to invest it in the stock market, get an actual return. So people aren't even using dollars for savings, and people don't use Bitcoin for savings. You don't complain because Apple's volatile. But even though when you go to the store, if you have most of your savings in Apple, well, the number of Apple shares per loaf of bread is going to be very volatile on any given day. But that doesn't actually matter to the average individual because they've classified it as an investment, as a share, as a means of savings. Now, you might not want to invest in Bitcoin as a company because it's not profitable. But, anything can become money. In jail, cigarettes can become money. Bitcoin, shares in this company, even though it's unprofitable, has become money because it's fungible, it's easy to transport, and it has a lot of other characteristics that are given the shares value above and beyond just the service it's providing, the fact that it's losing money. So money is flowing into Bitcoin, keeping the share price up, just because they can use it for something that serves as money. So that's, I guess, all I have for explaining what we're about. And I'd like to open the floor to questions. We got a microphone over here. And if there's anything you'd like me to go in greater depth, I'd be more than happy to talk more about how Bitshares X pegs the dollar, how the insurance works, how Bingo Bitshares Music will work.
Hey there. Oh, sorry. Is this on? No.
It's not working. Yeah, he's on it.
Test. Thank you. My name is Christoph Atlas. Thanks for the presentation. So I'm interested in topics of privacy and cryptocurrency. Mm-hmm. Can you tell me about what are the primary issues with Bitshares when it comes to privacy and anonymity and that kind of stuff?
Okay. Bitshares is based on a blockchain, just like Bitcoin. Every single address is linked, just like Bitcoin. So in theory, you can do the network analysis. We are working on a wallet that helps improve privacy through hierarchical wallets and never reusing an address and having one input to one output. So you can't actually do the network analysis. But all that stuff can be implemented on the wallet side, and it would apply to Bitcoin as well. One of the things you can do here is use zero-coin technology as an alternative business model for those who want to move their funds. And you can actually store your money as Bitgold, which is a derivative of gold relative to another chain. And those nice units work much better for zero coin because you have price stability and long-term storage with your privacy. So those are the type of things we can do.
Can you share with us some details about the Quixote project? I don't know whether you already talked about this.
Sure, no, I did not talk about Quixote, I just talked about Bitshares. So Quixote is our wallet. It's designed to combine your identity, your communication, and your money into one wallet. We have a blockchain for identity where you mine your identity. The goal is to actually support 1 billion users who can have a public key mapped to a unique human readable name, which will allow you to send Bitcoin, Bitshares to a name instead of an address. As well as make sure you have secure automatic communications between parties. So it's sort of like our wallet, our interface there to make all this other stuff possible, make it easier to use.
Can you share some statistics about the number of identities on the Quixote network and whether it's possible to obtain a reputation and maintain a reputation on Quixote, and how is that done?
Okay. Well, we are working as quickly as possible to actually launch the Genesis block of Quixote. There are hundreds of people that signed up as founders, and we've got thousands of users on our forum just waiting to get into it. So, but that's going to be launched as soon as humanly possible.
Okay, great. Thank you.
Hey, Daniel. I got a question. Why would someone want to build on a decentralized insurance company versus a traditional insurance company? Can you give me an example specifically of how this would be profitable? What's the advantage of doing it through Bitshares, for example?
All right. Well, with your existing insurance companies, they have to make an estimate of the risk. They could be wrong. They either price it too high and you're overpaying, or they price it too low and you're underinsured. They're selling a service and charging you for something they're not actually giving you. Not only that, a lot of insurance has a lot of other fees built in. They're insuring you for more than you actually want, or insurance is not available someplace, like the case I gave in Africa. Or it's something that might be a little gray and you might not want to insure. I don't want to advocate any particular use cases, but if you're concerned about getting caught with piracy or being audited by the IRS, in theory you could insure it on such a system.
And what is it about Bitshares that would allow you to do this where centralized authority would not be able to do it?
Well, with the centralized authority, you have underwriters, and they take your money, and there's actually a conflict of interest inside the insurance companies. They simultaneously set the prices, invest the funds, and they're investing other people's money. And so when you invest other people's money, you're never as good at it, and you might try to charge less on your premiums and hope you make it up in riskier investments. And you have counterparty risk. So the goal here is to eliminate the counterparty risk and to make sure you solve the pricing issue, because in an ideal insurance system, the average revenue from premiums should equal the average payout in claims, or you accumulate money forever, or you go bankrupt. So it operates on a pay-as-you-go basis, where if there's a 1% probability of you being in a car accident, the maximum return per dollar you put into the insurance is 100 times what you put in, because otherwise you can't insure for more than that. If you insure something that's got a 100% probability of happening to everything, you get the money in that you get out. And that's how it would work in regular insurance, except insurance salesmen like to lie to you about the odds or the benefits they're going to provide you. And then with traditional insurance, they're also the judge. You could take them to court and try to argue over it, but it costs even more money. So they end up selling you insurance, then judging what they're going to give you, and there's no competition to separate the judges. So in this system, it creates a pool where people pay into it, and when you buy the insurance, you have to put your identity as a hash into the blockchain. So you're the only one that can use it. You can't insure and then sell it to someone else and have them claim it. It then uses the same prediction market technology that pegs the value of BitUSD to the dollar, BitGold to gold, to set an underwriting authority for claim adjusters. And they can issue claims up to the amount that the market trusts them with. If the market finds that they're starting to issue fraudulent claims, it crashes their authority to zero. And all insurance claims have a 1-month period after the adjuster makes a decision before any payouts happen, which gives the market a time to kill their authority. So all the adjusters are competing in the market to earn fees by hearing claims. and they have financial incentive to be trustworthy. They don't want to give it all to one person because the more people they can serve, the more fees they can collect, but they don't want to under-award people because then people will go to someone who will award them more, or their insurance will they won't be trusted anymore. So that's the model there.
My question actually had to do with actuaries, and what we're talking about here is interfacing between a decentralized activity and real people in the real world that have to make decisions in relationship to things that, and you speak about the market or the blockchain making decisions, but it's not, if I'm part of that, I don't know anything about actuary really.
Right.
So I don't know. I guess the situation I'm having with Bitshares in general, especially when you get into insurance,
Yes.
is that interface. I mean, at least you certify things. You can definitely certify things, make facts clear, and you can hash anything to prove that it is of record. But at some point there, you interface, in Bitcoin, you're interfacing on, I want that, I've got some coin, let's change the ledger, and then you can have it. But this is much more complex and gets into all sorts of nuances that I don't see how a decentralized network can handle.
All right. Well, that's a very good question here. In the case of the insurance, the premium is you have income versus outcome. People buying shares versus the number of claims, and it's a zero sum. So the individuals who are buying the insurance have to assess what they think the ratio of payout is going to be. If they're going to try to insure a clunker for $5,000, they might buy 1 or 2 shares. If they're going to insure Tesla, they might have to buy a couple hundred shares, because the network has, by actual experience, it knows what the claims are, it knows what the money's coming in, and it does it on a pay-as-you-go basis. So the market discovers the price based upon what the actual payouts can be and what actual numbers end up being. It doesn't promise to pay you more than it actually gets, and that's how it discovers that price. All the other things, the way you reach a decentralized consensus about something is in a market. You have the bids and the asks, and you can use that basic building block to have a decentralized system answer any question with a prediction market. You can ask, who do you think is going to win an election? The Republicans or the Democrats? And the price is going to reflect the market's belief of the probability of one person or the other winning. Because whenever you have a bid and ask, it means everyone thinks it's either on one side or the other. The whole market's in consensus, and if someone disagrees, they switch sides, and then you're back in consensus again. So if you can implement markets on a blockchain, you can get these consensus things. That's how you get consensus of trust. How much do you trust an underwriter or an adjuster to actually award claims? And word gets out. If you start denying people and they make a big stink in a public forum, it's going to affect the price, and particularly when something as important as this. And of course, everything they say, they start making big amounts to their friends, people will notice it and tank them before they have a chance. So there might be a little fraud. There's always fraud in some insurance. And that's all going to be baked into the price of the insurance.
So, hi Daniel, my name is Chris, and I hope everyone will forgive me for what may be a very ignorant question. I'm very new to this community. So, can you please help me understand, I'm not following your basic business model of, let's say, just Bitshares, not music or insurance. What are you asking of me as a potential client or customer, and what am I to expect in return? Are you asking for my Bitcoin as an investment? Are you asking? Just help me understand it. Maybe like you'd explain to your 5-year-old son.
All right. I'm not asking for anything from you. I'm offering you an opportunity. I'm really trying to educate. So when I talk about Bitshares, I'm not referring to any system. It's like I'm trying to sell you the idea of stock. It would be really great if companies could sell stock to raise money to bootstrap, and the general public could participate in the growth of the companies. That sounds like a great idea, but you're not talking about any particular company. In the case of Bitshares X, hey, I've got this business model. It's like a franchise. Anyone can take this business model, launch a DAC, altcoin, and try to launch a bank that way. So I'm giving people an opportunity to build decentralized businesses. I don't need to run these things. If someone launches some of these things, I'm going to buy them. But each of these is just like Bitcoin. So what's Bitcoin asking of you? Right? When someone comes to you and they say, hey, you should really look into Bitcoin. They're really trying to say, hey, there's this company out here and it's doing these cool things. It allows you to trade the stock. It's really got a lot of utility. You might want to buy some for your own good. Now, for something like insurance, you might get other benefits, or music, or you discover new songs. You can get a stake in the artists you like, or you can get the end domain name squatting. All these things can be done, but I'm really giving entrepreneurs a new framework for thinking about how to build businesses that are entirely decentralized. And my metric for success and whether or not these things are truly decentralized is that if after I write the code and we publish it, if we can walk away and disappear like Satoshi, I guess he's been found or something. But if we could, it should still operate just like Bitcoin. And that's the measure of decentralization that I'm referring to when I'm trying to design these systems.
Hi, Daniel. Yeah, there we go. Hi, Daniel. My name's Rich. I'm really interested in what you guys are doing. I've been following it from the beginning. I actually signed up for a founder ID for the Coyote project. It's good stuff. I guess I got really confused when you guys introduced the Angel Shares program, and I know that you haven't spoken on that. But if you could kind of briefly explain what that was and how it relates to the Bitshares PTS and really the allocation of shares that you have going on with that.
Okay. So early on when I was designing Bitshares, I was in the mining camp. I thought that it would be possible to build a CPU-only coin that would use a proof of work. So I designed the momentum proof of work. It was memory hard, so that everyone had a fair chance at it. People kept asking me, when can I start mining Bitshares? I want to start mining Bitshares. And so we launched ProtoShares as a prototype of getting in. And we basically told everyone that if you held a ProtoShare when we launched one of our future products, that you would get at least 10% of the shares in the new companies. Well, that was a wild success. It took off very quickly, and what we learned is that people were spending $100,000 a month paying Amazon to burn electricity and rent computers to get a share in what we're doing. And we realized, well, if people were only to spend that much, it obviously is costing them something to get into what we're doing, but it's not providing us any capital. And it's about that time that I realized, well, that would be like saying, hey, I want to start up Apple Computer, so I'm going to give shares in Apple Computer to anyone who's willing to burn electricity with their power company. And so you give all the shares away, and then you have no money to actually start your business. We made a social contract with the ProtoShare holders that they have to have at least 10%. But we figured, well, what if we made mining a black box? You put money in, shares come out. The more money goes in by more people, the less shares you get. So we just made mining a black box, and we did Angel Shares. The concept behind that is sort of like Mastercoin. We provided a Bitcoin address and a ProtoShare address, and you can send your money to that address. And we just described an accounting method to make it an auction. Each day, 10,000 shares, Angel Shares would be awarded. And then when we initialized the Genesis block, the private keys you use from your wallet to send us money could be used to get your stake in the new DAC. And we also promised at least 10%. In the case of Bitshares X, our first bank and exchange, it's 50-50. That campaign was wildly successful, and we've raised about $4 million crowdfunding from those two sources since January. So now we actually have the money to pursue these ideas, hire people, market, get these things out there.
Hello. Hi. I'm here. So when you talk about crowdfunding, one of the things that, as I try to wrap my head, and I'm sure a lot of people here try to wrap their heads around Bitshares and Mastercoin and Ethereum, that's definitely one of the funding models that comes out and comes about. And I haven't quite seen a definitive answer in terms of just, particularly in the United States, with the legality of either that model of funding, but also the extension of where in the SEC gray zone does this whole thing appear? And I know you guys have kind of started to form together to try to get some clarity on these rules, but I'm curious as to where it is and where do you see that going in terms of funding entities that should not physically have a place, right?
Yes, yes. Well, those are very good questions, and I'm not a lawyer, so anything I say here should be checked with your own lawyers. The thing we tried to do with what we're doing is everything's non-binding. We accepted them as gifts with no strings attached, other than we suggested an accounting mechanism. So we don't actually give any quid pro quo other than, hey, you think we're a good cause, we're going to build something that maybe you want to invest in. And the other thing is we personally have separated the creation and publishing of the software from the deployment and usage of the software. And we're allowing other people in the marketplace to take our software and release it and honor the social contracts. Because the reality is, with all this open source stuff, is anyone can clone yourself, clone your code, release an altcoin, and reallocate the shares however they want. So it's all about social consensus and what the market will accept and the network effect. We have thousands of people that own proto shares and angel shares. And anyone who tries to take our code and do anything other than what we suggested, they're just suggestions and not commands, all of our stuff is given away for free. And that's how we tried to negotiate it. That said, we are looking at friendlier jurisdictions because what you say and what you're trying to do and what they accuse you of doing don't always have to line up. They can accuse you of anything, even if they're wrong. So.
When do you think? When is the soonest you think you'd have a functioning BitShare model, like one of the insurance things? When would the soonest that be available for people to actually get shares in?
We are currently testing BitShares X, which is our bank and exchange. We are incredibly close. I'm terrible at predicting release dates. I was predicting a release date mid-March, and I think that's probably going to be a little bit later at this point. Things come up, whether it's legal or marketing or bugs in the software that we have to consider. So we are very close. The code's there. You can look at the code today. You can see the entire structure of the blockchain. It's all defined. You can check it out. So we're close, and it's definitely going to be definitely this year. Definitely, it's supposed to be this month. So it's around. I don't know. I'm not going to make a firm commitment just because I do that and people get mad because it's not ready yet. And I think people would rather have something that works than not. But it's very close. This is not some far-fetched dream. I started working on this 9 months ago, as far as the ideas and get it down on paper. Been writing much of the code. We just got our large source of funding, and so we've been trying to hire people to accelerate the process. And believe it or not, trying to hire people actually slows you down because you're interviewing people and training people, and so it's a trade-off. But yeah, it's very close.
Side. That's the far away. Here.
Just speak up. I think we can all hear you.
All right. Anyways, quick question. With the mining of these shares, perhaps you explained it, but I did not get over that. Is this more of a proof of work, or is this a proof of stake system? No. Now it's going through.
Okay. So the question was, how are we securing the network? Proof of work, proof of stake. We've got a unique proof of stake system that is different than all the other proof of stake systems out there in a critical way. 100% of the people who are using the system contribute to the security. Every single transaction, every time you make a transaction, you're doing so on the assumption that the blockchain is in a state that you expect. And so if you include the hash of the most recent header in the blockchain in your transaction, then you can actually use if you're familiar with the concept of Coinbase, you can actually use that as a way of securing the network. So each and every user who makes a transaction secures the network. Now, there might be some variance in the number of transactions that are occurring at any given moment. So we provide financial incentive for people to make transactions to themselves to secure the network. And based upon the number of shares, it's secured by proof of stake. You get basically one vote per share, per block that you held the share. And every block is required to have at least the minimum number of votes based on the average over a year. And if there are not enough transactions and you can use some of your coins to send to yourself to fill it out, you get a portion of the transaction fees proportional to the number of votes you contributed versus the number of votes someone else contributed. And no one can build alternative chains because your votes only work in chains that include the hash of the block that you saw. And so that's our security model, and that's all working right now. So is there any?
Yeah, I'll just ask it from here. I think one of the things that was confusing some people is the idea, proto-shares, we didn't really go too far into that, but that is the actual proof of work model. Bitshares is forked from that. From that point on, we move on to a proof of stake model. I think that's what's kind of the issue of confusion.
Right. So right now you can mine proto-shares. Bitshares PTS is what we've rebranded it to.
Right.
Stupid trademarks. It's mined using a CPU-only coin. Of course, when there's lots of money to be made, people work to make a GPU algorithm for it. So you can actually mine it on a GPU. It's only 3 or 4 times better on a GPU, which is better than a lot of other attempts to make CPU-only systems. You can currently mine that, and you'll get shares in the future of everything we do. The snapshot for Bitshares X has already been taken on February 28th. So if you mine Bitshares PTS right now, you're actually investing in domains, decentralized voting, bingo, insurance, all those other things on our roadmap would be what you would be getting for buying Bitshares PTS. Yeah, and when I say investing, I mean it in the sense like you're investing in treasures in heaven when you give us money.
Will you explain how the blockchain enables these decentralized autonomous companies to operate?
Okay. The thing that blockchains give us is a way to reach consensus about the state of a ledger, about who owns what. It's an alternative to the previous ways we've reached consensus in society, which is having some government official mandate to us what the consensus actually is. So blockchain keeps track of the transactions. It makes sure that they're irreversible. So that's the only thing you really need out of a blockchain, is that only authorized people can update it, or that's the signing of the transactions, and that it's irreversible. And I guess that it's redundant. It's copied lots of different places. So you can have a blockchain that's operating on a single server that's just as effective at reaching consensus, as long as even the owners of the server can't change the balance or change the consensus. And there's at least one other person that's got a copy of the blockchain in case there's any dispute over what the case might be. So there's a lot of mixture of the idea of, oh, you got P2P and you got blockchains, but it's really the consensus process and the tracking of ownership in a way that's secure and authenticated. That's the real innovation behind Bitcoin. So I think we're out of time. How much time do we have left?
Actually, about 2 minutes over.
All right, so I guess one more question. Oh, we're already over, you said?
Yeah, you got it. You can pick one.
Oh, one more question, if there's anyone. Yeah.
What is the best way to learn more about your projects, short of going to the forums and reading all the posts?
Okay.
And being a member of the community, what's the shortest, fastest way to learn about it?
If you want to get regular updates about what we're doing, you can.
An introduction. I mean, say to get introduced.
Yeah, really to get
Someone like me.
figure out what we don't know.
Figure out what you don't know. All right. Well, obviously, our forums are, there's a lot of information there, and we've got a lot of feedback that's amazing to sort through. Obviously, if you spend the time, you can find out everything we're thinking before we think it on the forums. But our website provides some very high-level overview right now. Our original website had a lot more in-depth, and everyone complained that it was too 1990s. You know, that's what happens when you have, my father put it together. Good guy, but he doesn't have the tools. And now we have a nice, pretty website that's relatively light on details. We have white papers and things on our website that you can go and look at. And later this month, we'll have an entirely new website with a blog and much more detailed information. We're preparing videos to discuss it. You can visit our YouTube channel, where I have videos that describe how Bitshares X works, describe how Coyote and what's motivating it. So visit our YouTube channel, and we're adding more content there on a regular basis. We're going to really focus on video.
Thank you.
Thank you guys very much.